Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades today is Tim Bohen, Chief Technical Trader, StocksToTrade.com. Tim, before we get into the picks on your list today, I want to get your big picture take on the market this week. Scott Bauer calls this a Teflon market, especially when, and we just heard from Bob Dahl, he says where good news is good news, bad news is good news. What's your take?
I watched Bob's segment, and I'm a big admirer of his, and I totally agree. I mean, at the end of the day, I'm a big believer in the madness of crowds. And at this point, the good news is great news, and as he said, the bad news is okay. So I'm very bullish. As always, you got to be smart when, mostly what we do at Stocks to Trade is short-term trading. You got to have a trade plan. You got to have a stop loss. You got to stick to that. But in the short term, I just see continuing higher. And actually, I was on Schwab TV with Nicole, right around Liberation Day when there was a lot of fear out there. And I was crazy bullish back then. And look at where we went from, early April to today.
Tim, did you have a crystal ball? Don't answer that question. Let's talk about the first name on your list today. You've got Opendoor Technologies on your list. So, okay, year to date, it is outperforming the S&P 500. But I have to give this caveat. Those gains have really happened within the past month. So tell us about this one.
Yeah. So again, thank you for having me back. But, a month ago, I was here with Nicole again on the first big day with Opendoor. And I loved it back then because it first emerged as that meme stock. I know that's a funny term, but listen, it's the reality. So it's back as a meme stock yet again. I was actually with Nicole the first day of the big run. And now we've got something changing. I was kind of surprised. Paul Tudor Jones, I'm a huge admirer of Paul Tudor Jones. I actually watched the Trader documentary back in middle school, that PBS documentary. But I see he's in. And the other thing, I'm looking at the coming rate cuts. I think we're going to see a lot of this, kind of unfreezing of the real estate market. So when I look at Opendoor, what I like about it is the chart. I love that chart right there as she pushes the new highs. But we've got, kind of that madness of crowds, as I mentioned earlier, with all the Redditors and the Wall Street bettors. We got a guy like Paul Tudor Jones buying in. And then we've kind of, in my opinion, a fundamental case for a real estate play as we head into fall. And, at this point, everybody's kind of it's a lock that we're going to get some sort of rate cut coming up, which in theory kind of brings all three things together on Opendoor.
Yeah, and look, and they've also got some shakeup happening in the C-suite. The company announcing today that their CEO, Carrie Wheeler, stepping down effective immediately. Exactly. The board appointing their chief technology and product officer as interim leader while they search for a new CEO. But it seems like the street is receiving this news very positively. So, Rick, take us through what you notice about this chart.
Interesting things you could say about this chart here. The most obvious is this explosive move to the upside that took shares from 50 cents to almost $5. So really a fascinating upside push here. But if we were to backtrack a little bit, take a look at this green line, 250. This was an area where price topped out several times earlier this year. That was a point that many traders may have had their eye on, watching for that potential breakout. We did indeed get it here, but we also had a bit of a retreat to this level here, 170. If you were to draw our trend line back a little bit, or rather our horizontal line here, it would be roughly around these highs and lows that occurred here. So this would be an area to monitor going forward for potential support if that 250 level does get breached once more. But for now, we saw extraordinary volume, 1.9 billion with a B shares changing hands at one point during this spike to the upside here. Notice as well, the RSI was showed a reading above 94 at one point here, so firmly in that overbought area. RSI only goes from 0 to 100, so that's a pretty darn high reading in terms of momentum here. For now, though, we are hanging on above our previous best close, the intraday highs. We're far beyond the best close there. 321 is the high close price. Today's candle activity showing big wicks to the upside and the downside, so but a smaller real body. For now, though, if we were to look at our standard deviation channels and volume profile studies, we can see heavy volume in this general area here between about 190 to 230 or so, but the heaviest trading of all down here at these low levels near 50 cents. In terms of standard deviations, the plus 4 channel comes in here, the plus 5 channel comes in here, 338 and 397 respectively. Those could be some other potential guidelines to consider going forward. Remember, this is just a snapshot of this moment in time. It'll be a moving target as price progresses.
Okay, all right, Tim, I want to get a final thought from you on this this name before we move on to your next trade on your list.
I love that technical breakdown, by the way. I need to hit him up. Basically, a lot of what we do, again, in short-term trading is heavily based on everything he just went through to kind of map out those support resistance levels as well as breakout and breakdown levels. So, I mean, my read is, if you agree with my kind of breakdown of the big picture thesis, follow those technicals that he just gave, because I literally went over the exact same thing this morning and absolutely love that breakdown.
Okay, all right, let's talk about the next trade on your list. This is Rigel Pharmaceuticals, also up year to date, outperforming the S&P 500, but with an even shorter window here, really within this month, August. So we're just 2 weeks into this month. So tell us about your views on this one, Tim.
So basically, this was a really cool stock because Friday night, it kind of took off Friday night. And I've always been a technology guy. I build a lot of trading technologies with the help of stocks to trade. And this first showed up on our swing trade AI. So it's an artificial intelligence that looks for strong fundamentals, earnings statements, as well as technicals. So a lot of people, like I'm sure the reason you have your guest is a lot of people struggle with technicals. So this first hit the radar Friday night as a buy at $33 from that AI all by its own. And then you can, he's going to go over the chart, just been trending up. And what I like about this is, in these kind of lower mid-priced speculative biotechs, RIGL, I call it RIGL, it might be Rigel, but it really has pretty strong fundamentals and constant news flow. So that's why I think we've seen basically every day this week, this stock just keeps trending up from that 33 buy. And what the AI does, using technicals, it also projects out price targets. So it sees, we'll see, as always, you got to have a stop loss. You don't want it to go, full on, Terminator on you. But it sees a price target at 50 plus. And when I look at that chart and the trend it's been on since Friday night, I think that's a real possibility on this. And I just love the fact that it's actually a decent, fundamental case in the biotech space because, it's a very speculative space across the board.
Okay. All right, Rick. So then let's pull up this chart and tell us what you notice about the chart for Rigel.
Well, the main similarity is another very strong move to the upside. We've pretty much doubled over the course of the past three trading weeks or so. 13 green candles in a row if we do finish up once again today. So really just a crazy high move here. And it reminds me of the old expression, bull markets won't let you in, bear markets won't let you out. This is one of those situations where everything kind of just keeps surging to the upside here. We do have some interesting horizontal levels to discuss here. You could look backward here. You could see our green line, 29.50. That's about where we formed a double top. That is about where we halted briefly after that big green candle. We actually cleared it slightly here, but that was a point many traders probably had their eye on. We could also see this lighter green line here, a similar boundary near 24.50. Our moving averages at this point, not too terribly much help here. You could try using a very short-term EMA like the 9-day or something if you wanted to, but this is the kind of situation where it's like you kind of caught the tiger by the tail and you're on this rocket ship, and the question is, where does it stop? Where do you get off of there? Because we can see once again extremely heavy volume here, but momentum starting to slow somewhat despite remaining overbought. Now, I got to say, I'm a little bit disappointed on a personal level in this rally here because I had a fun fact I wanted to share. I think probably the name Rigel is a star. Rigel's a star in the constellation Orion, and the candle pattern that was forming was an evening star here. So we saw a gap up, a small red candle with a small real body. Then the next phase of that pattern would be another large downward candle to the downside, a red candle the next day here. It didn't really play out here. That could be something to look out for going forward. These types of candle patterns can suggest the trend is being interrupted and starting to break down here. So something to remain on the look at, but my fun fact was ruined. If we were to look at our standard deviation, if we were to look at our standard deviation channels, once again here, 3 and 4 are the boundaries, 36, 17, 40, 57. That's where the +3 and +4 channels come in. Not really much else nearby sticks out.
I love that fun fact, Rick. That was amazing. I love that you brought that in. And you also taught me another, even though I've been down here on Wall Street, I won't say how long, but the bull markets won't let you in, the bear markets won't let you out. I didn't know that phrase. All right, Tim, let's talk about the final trade on your list. Joby Aviation, that was actually higher earlier in today's session. It still has been an outperformer year to date, but it's flagging a little bit, coming down to earth, if you will pardon the pun. But it initially gained some ground off the back of the news about this 12-minute flight. So the future may potentially be now. What do you see about this one that you like?
Yeah, so like you said, I actually like this pullback. I'm looking forward to his technical breakdown because I'm thinking we're going to agree on this one again. What I like about this is, this stock has a big history of running. You go back to July, where it went on a massive tear and then kind of just went into that consolidation zone where it's just building a base kind of right there in the low 17s, mid 16s. And, it did that after the big takeoff move. And then early in August, blew back and then kind of back in that zone. So looking for this, particularly on news, to really push through that zone. And I think that this thing could match a move like it made in July. Now, the reason I like this stock is eVTOLs. I'm very bullish those. I mean, I know it's very futuristic, but I grew up watching the Jetsons. We were supposed to have these in the year 2000. Here it is, the year 2025. We still don't have flying cars. And then the other reason I really kind of took an eye to Joby was the sector, the past movement, but then also, I'm a big believer in American dynamism. I actually listened to a podcast just the other day with Catherine Boyle on the Sean Ryan podcast, and there's just so much emerging technology in this military tech sector, whether you look at like Anduril or Saronic. And I mean, those companies aren't public yet, really looking forward to those, but there's so much innovation in the drone space and the technology space that I think that's going to filter down to the commercial plays like Joby. And these things I think will be rapidly adopted. And hopefully I'll be flying to my next appearance in an eVTOL, and hopefully it doesn't, come crashing down.
Yeah, with Rosie the robot taking care of things at home. All right, Rick, take us through the technical.
Hey, Elon's got his robot. Elon's got his robot.
Yes, indeed. It's true. It's true. All right, Rick, what do you notice about this chart?
So 3 interesting charts, really, all that kind of share the same characteristic of a really strong breakaway move here. This one is perhaps a little longer in the tooth than the other ones because we've seen this sideways consolidation phase here. So when we look more closely, we could see, for starters, you could draw this trend line here going across the lows from this acceleration phase we saw in July that Tim mentioned here. But for now, though, after our big spike to the upside, largely horizontal price action between 1650 to 1850, roughly speaking here. So we did have a push to the upside here. We made those new highs, but we quickly lost that ground that we gained here. We retreated back to that familiar range. Once again, today looked like it was perhaps going to be a breakout, but we have a quite large red candle that has dropped off from those highs. But once again, we're still in that same range here. And notice as well, we have still held on to our yellow 21-day exponential moving average despite our break below our blue trend line here. So still got those sideways boundary ranges to watch out for. RSI, if you were to notice, was showing a little bit of bearish divergence here. Well, despite remaining in that overbought area, price made a higher close. RSI did not follow suit. It trended the other way here. It did result in this decline here, but Diane mentioned a crystal ball earlier. Technical analysis patterns, none of this is a crystal ball. It can go in different directions here. What you're trying to do is not make predictions, but identify the key areas of support and resistance, looking for potential strike prices, etc. here. So one other quick thing to point out too, it could possibly be a head and shoulders type pattern forming here with our shoulders and our neckline. So a break below that 1650 level would really be noteworthy from that perspective here. Once again, if we were to overlay our other studies here, the middle of the range, kind of not really surprisingly, that's where the heavier volume is in the near term, around 1725 or so. So that's kind of showing that really once we start to get below that volume node, everything starts to drop off a little bit here. But if we were to push to the upside here, we topped out today at our +2 standard deviation channel. 1891 would be one area to watch on the road back to those highs near 2095.
All right. Thank you, Rick. That's our Rick Ducat, lead market technician. And we have Tim Bohen, stockstotrade.com. Thank you both, guys.